Hey guys, in today's video, we're going to be taking a look at one of my trading accounts that has been performing really well recently. And let's go ahead and jump into the... Holy crap. What happened?
Dang it!
Watch out, watch out.
You guys do what you want today.
I'm back. I'm kidding, guys. But on a more real note, sometimes that's how trading can feel. You can be really frustrated with the ups and downs of an account. And in this video, I'm going to be going over one of my trading accounts that has overall done really well, but experienced some pretty serious drawdown. Let's jump in. Hey guys, welcome back to another video. Today, we're taking a look at one of my trading accounts, and I want to have a very honest conversation about a serious drawdown that I have experienced in my trading on this particular account. Now, this is one of the trading accounts that I use, and on this account, I am trading mostly things like the S&P 500 and gold and occasionally oil on here. I use this account to trade some of the non-currency pair related trading that I do, which makes up a good chunk of what I actually focus on. I know a lot of you guys know me for my currency trading, things like, dollar, yen, and euro dollar, things that I trade all the time, but I also trade these things, and I actually don't trade them on Forex brokers. So just a little bit of clarity, the account that I'm looking at is on WeBull, which is a US stock exchange or stockbroker that I trade on. I use ETFs to trade my account here. And I want to show you a little bit of this performance. I want to talk a little bit about what I went through on this account and just a level of just some transparency around this account. First of all, let's start with the good. At the start of this account, pretty much the entirety of its inception, I started implementing a trading strategy that for a little while worked incredibly well. In fact, if you were watching this account during this time, which many of you guys who are inside of our Discord and stuff know that, during this time we were trading a lot of S&P 500, trading a lot of gold, right? This time, those markets were rocketing higher, and I was very bullish on those things. Now, what you'll notice is that if you looked at the account during this time, my trading makes me look like an absolute hero here. The account doubled in, just a short year and a half. It was an incredible time in my trading, and to this day, probably the best trading that I've ever done was basically during the 2020 crash. We had some breakouts that started forming to the upside, and I just got long, and I just kept buying dips on these two assets a ton. But what I really want to talk about in this video is not just hyping my time when things were absolutely fantastic, because as traders, we all have times where things are good. What really matters as a trader is this period of time. Because look at this. If you were to look at the account during this particular time, you'll notice that there's a lot of decline. In fact, if you were only looking at my trading account during this period of time, you might say, Nick, you kind of look like you should change your strategy.
Oh, brother, this guy stinks!
What was the context of this time? Well, during this time, we had the stock market crash. Now, when I opened up this account, I was focusing very heavily on a trading strategy that was pretty much long equities, long the S&P 500, the indices, right? I was trading NASDAQ, I still am, that's to this day, that's what I'm trading on this account. I do a lot of NASDAQ trading, a lot of S&P 500 trading, a lot of Dow trading, right? And then gold trading, things like that. Now, I'm not using options, I'm just trading ETFs, which is, if you're using a CFD, for those of you guys who are probably trading these things outside of the US, then you can probably trade them on your Forex broker. You can trade SPX 500, US 30, which are the equivalents basically of the futures contracts, the ETFs. They're kind of all reflecting the same thing. So SPY is what I trade. It's the same thing as SPX 500. Anyways, what I want to talk about is this window in particular, because during this time, my strategy, for lack of a better way of saying it, kind of fell apart. And the reason I want to talk about this is because during this time, I looked like my trading absolutely sucked in this account, which, to be fair, it kind of did, right? I mean, the account, we can get into some numbers here. Let me show you this. We went a gain at this point at the peak. We were up $88,000 on the account, right? Peak gains, $88,000, $89,000 on this account. And then we gave away about half of that, if not more than half of that. Look at that. About half of the gains wiped away. Now, we're still in profit, but again, had I started this trading right here, I would have lost 40 grand on that account, right? So it probably would have made me look foolish. Now, the reason I'm showing you this is because as a trader, this stuff is going to happen to everybody. Before we proceed too far in this video, let me go ahead and preface, because I already can see, people sort of commenting like, how could you have such a terrible performance? Let me just give a little bit of context. Yes, there was some pretty serious drawdown, and I'm sure that I could have played things a little bit better with hindsight in my favor, but let me go through a little bit of context behind the strategy. Basically, this account, I focus a lot on being long-oriented, mostly on things like the S&P 500. I don't short the S&P 500 very often in this account, though I was able to catch a little bit of short side. For the most part, it's a long-oriented strategy. And what I mean by that is usually I'm looking to do my same old concepts. I'm looking to buy pullbacks, hold them, trail stops, etc., which during this phase of the market was a huge win. It was only until recently, or I guess in the last year or two now, where things have been very, very bad on the S&P 500, where things have crashed so terribly, and throughout this entire phase, still trying to be long during this time, stopped working so well. Now, I still had some good runs. There were still some decent trades that I was able to make during this time, which is why, as you saw in the previous video, my equity has returned to the previous high much before the S&P 500 has, which, to the strategy's credit, is kind of nice. I was able to capture some run-ups in here, sort of catch long moves here and bail on the trades before the market got ugly again. But again, much harder to swim against the tide, if you will, or swim against the river, if you will. The flow of traffic now has been to the downside, and only recently has it really switched back into what I would consider a potential bullish market with a big breakout. Anyways, that's for another video. That's just a bit of context as to why the strategy is working so well over here and performed much more poorly during a down market environment. Again, I plan to stay long oriented in this strategy or in this portfolio, this account. So, there is probably going to be some negative decline on the account during bear markets, but should do well when things return to bull status, for lack of a better term. This period of time is a really good learning lesson for traders. If you don't have the confidence to run a trading strategy through thick and through thin, you're going to really struggle in the long term, because let me just say it this way, there will be times where your trading will look more like this. And then when this starts coming along, you're going to ask yourself a million questions. Do I need to change strategies? Do I need to adjust what I'm doing? Do I need to manage my risk better? Do I need to change the assets that I'm trading? Do I need to give up entirely on trading stocks and stock indices, right? Those questions kind of came into my head. But my point with telling you that is that, okay, I trade many things. I trade I trade, indices, I trade commodities, and I trade currencies. The reason I want to show you this is because despite this period of time happening where I was net down for a while, we've recovered since in the most recent push, and some of the trading has been really good recently. But during this time, I had a million questions for myself. Should I just stop entirely? What's going on here? But I knew that I was going to stick to the plan throughout the entire time, because I've done a lot of testing. I've done this stuff for a long time. And before I even had this trading account, I was trading this strategy with pretty good success before this. Let me pause, and I want to show you something on the Forex side of things at the very same time. Okay, and I've got it pulled up now, and this is the other side of trading that I want to go over. At this same time, the same window where things were going really poorly on my WeBull account, where I was focused heavily on indices and gold, the overall performance of this account was quite good. So the interesting thing here is by diversifying what I trade. Now, I'm not saying that this is for everybody, but this is how I do it. Because I use a variety of different baskets of things that I trade, there are times where some things work better than others. During this time, during 2022, when the markets were crashing, which made it very hard for my long-oriented strategy on the S&P 500 and Dow and QQQ or the NASDAQ, right? During that time, my stock account really took on some pressure, but my currency trading went phenomenally well. We had a lot of US dollar longs, trades that went very, very well for us. So my point with showing you this is that by diversifying what I trade and having sort of different baskets that I'm trading at the same time, I'm able to do what is called sort of a equity chart smoothing, where in some trading, it's going to be going well, whereas in some other trading, it might be going poorly or break even. But overall, by diversifying sort of my approach, it's kind of the similar concept to buying many stocks. Instead of just buying a single, company and putting all my money into Tesla, which is basically sort of an all-in, bet on the stock market. If all my money is in here, I'm either going to make a ton of money or I'm going to lose a ton of money. By diversifying what I trade and by diversifying my approaches, maybe implementing more than one strategy, this is advanced for traders who have sort of been doing this for a while. Instead of just buying one stock, it's similar to adding other ones, like for example, putting Apple in there or Walmart in there, right? Or, Costco, right? It's the idea of like diversifying. And this is why I want to show you this video, is because even good strategies have periods of time where things go absolutely terribly. For example, when this account was not doing so well, my stock account was going incredible, or my WeBull account was going really, really well, you can see that this one kind of went flat to slightly negative with some pretty steep drawdowns in there. My point is, by diversifying sort of your approach, assets list that you trade, strategies that you implement, you can smoothen the equity of your overall trading performance. And I just want to kind of go through that and just talk a little bit of transparency. When it comes to this stuff, you're going to see people only ever showing you their highlight days. So if I go back to my other chart, even within this period of time, I could just show you publicly these sort of moments, right? But this sort of does people injustice, because no matter what strategy you have, look at this. There was this great period of time, and then this declining period of time, and then this flat period of time, and now this rallying up again time. My point is that by having sort of multiple strategies, multiple things that you're trading at the same time, I'm able to just sort of diversify and clean up, if you will, smoothen the equity. So if I was to cross the two charts over each other, my two primary trading things that I trade, right? The indices and commodities on my WeBull account, and then my currency trading on my Forex accounts, right? It might be able to generate more of a smooth overall curve. But understanding that if you go all in on one sort of concept, you're going to have periods of time, inevitably, where it works amazingly well, and there's other period of times that you have to accept are not going to go so well. This is the patient stuff that people talk about so much in the industry. It's really important to build true, genuine patience in this stuff. Anyways, thank you for watching. I kind of just ranted about this trading performance as I was going through it myself, and just sort of reflecting on my own performance. And hopefully that's helpful to some of you guys. If you enjoy these sort of videos, hit the thumbs up button, subscribe, and we'll see you next time. Thanks for watching. It looks like you made it to the end of one of my videos. Thank you so much for supporting my content. It really means the world to me. And down below in the description, I've put together some of my best resources for aspiring traders who are looking to improve. I've got some free downloads that could help you, some broker recommendations, and if you'd like to join our Discord or get access to some of our trading software, all of that will be linked down below in the description. Thanks for watching, and we'll see you next time.